Ladies and gentlemen, good day and welcome to Dhanuka Agritech Q1 FY25 conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Darshita Shah from Antique Stock Broking. Thank you and over to you, Ms. Shah.
Thank you, Shlok. On behalf of Antique Stock Broking, we welcome all the participants to Dhanuka Agritech's first quarter FY25 earnings call. Today we have Mr. M.K. Dhanuka, Vice Chairman and Managing Director, Mr. Rahul Dhanuka, Joint Managing Director, Mr. Harsh Dhanuka, Executive Director, and Mr. V.K. Bansal, CFO on the call. Without further delay, I would like to hand over the call to Mr. Dhanuka's opening remarks, post which we can open the floor for Q&A. Thank you and over to you, Dhanuka ji.
Thank you, Darshita ji. Good afternoon, ladies and gentlemen. I am M.K. Dhanuka, Vice Chairman and Managing Director of Dhanuka Agritech Ltd. I welcome you all to the Q1 earnings call of Dhanuka Agritech Ltd. I hope all of you are doing well and keeping safe. I have with me Mr. Rahul Dhanuka, Joint Managing Director, Mr. Harsh Dhanuka, Executive Director, and Mr. V.K. Bansal, CFO of the company. As you are aware, Dhanuka Agritech is a leading agrochemical company in India focusing on brand sales in the market. Also in FY24, Dhanuka has commenced operation at our Dahej chemical synthesis plant and we are working to create breakthrough in chemical synthesis. Dhanuka is working with the vision of transforming India through agriculture. We have a pan-India presence to reach out to more than 10 million farmers with our products and services. Dhanuka's key focus has been on introduction of novel chemistries and extensive product development distinguish us from the rest of the industry. Firstly, I would like to share a very important announcement with all of you. After attaining the age of 75 years, Mr. R.G. Agarwal, who is the chairman of the company, has decided to pass on the baton of the organization and step down from his operational role. I am thankful to him and the Dhanuka's board of directors for entrusting this responsibility to me to take on the role as the chairman of the company. Mr. Agarwal's leadership has been nothing short of extraordinary. His vision and foresightness have guided through challenges and opportunities, always with an unwavering commitment to excellence. Friends, I am happy to share that Mr. Agarwal has accepted board's request to continue, guide and mentor us to ensure that we stay in alignment with our long-term business strategy as Chairman Emeritus. We welcome him as he has been elevated from Chairman to Chairman Emeritus. Further, Mr. Rahul Dhanuka will now assume the role of Managing Director of the company. Rahul has worked dedicatedly over last 25 years in making Dhanuka brand powerful and under his leadership, Dhanuka is transforming into a sales and marketing powerhouse. I am confident that he will lead the organization into a bright future. Now I will request Mr. R.G. Agarwal, Chairman of the company, to share a few words with us on this transition.
Dear friends, at the age of 75, as I stand here today and look back at my journey of 55 years, I am filled with immense pride and gratitude towards all our stakeholders, shareholders, directors, investors, employees, customers and vendors. With all the support, I have been able to build a great organization. Dhanuka Agritech, which is completing 44 years of operation. Today, as approved by the board, I am overjoyed to pass on my role as chairman to Mr. M.K. Dhanuka to guide the organization into the next phase of growth. He has been a great pillar for the organization and working for the growth and success of the business. He has exceptional leadership skills and a remarkable entrepreneurship. Further, with Rahul as the new managing director, I am looking at the speed of Dhanuka increasing even more. Rahul's connect with people, focus on building brands for business and fostering great relationship with all principal companies has played a critical role in our growth. I am particularly delighted with the last financial year's performance, where we achieved record high profit and one of the best profitability levels, in spite that last year was not good and many companies were having degrowth. I am also pleased with the continuing success in the first quarter of current financial year, which is a very, very proud moment. Our achievement is exciting and highly commendable. As I move on the next stage of my life, I would like to wish both of them great success. Once again, thanking all the investors and all of you on the call for your support to Dhanuka in the past, and hope same you will continue in future. Thank you very much. Thank you.
Thank you, Mr. Agarwal. Friends, as chairman, I pledge to honor our heritage while embracing the winds of change. We will innovate fearlessly, knowing that progress is not linear, it is exponential. With your support, I am committed to build bridges that increase our speed further. As we transition, let me assure everyone that this process has been years in the making. It began with Mr. Rahul's appointment as Chief Operating Officer in the year 2021, followed by my appointment as Vice Chairman and Rahul taking on the role of Joint Managing Director in 2023. Through careful hand-holding and seamless, today marks the culmination of our efforts, the passing of the... Friends, transitions can unsettle businesses, but our transition will fortify us. Our future is bright and we stay committed to transforming India through agriculture. India ka pranam, har kisan ke naam. Coming to the Q1 performance of the company, friends, this year the weather conditions have shifted positively, although not as per the expectations. The effects of El Nino have subsided. However, the La Nina effect is yet to be observed. There was less than 100% rainfall in first quarter and uneven rainfall in several regions in the month of July till 25th July. The raw material prices have mostly stabilized now. However, there is still price reduction on the basis of Q1 FY24 versus Q1 FY25. Overall, the demand for all products was very good in this quarter. The rainfall was highly uneven in July, especially in the central region, impacted herbicide liquidation. On a positive note, the IMD has given an updated forecast of above average rainfall for August and September for most regions in India. This is a good sign for the rest of the Kharif season as well as the Rabi season. Already, the water level in reservoirs and dams is increasing. Our new introductions, Pulse, Lanevo and Micro Super, are receiving great response from the market with the demand exceeding our expectations. I am confident that these products will create new benchmarks in Dhanuka's history. Further, we are going to launch 294 Me Too products in next 3 months. We are committed to keep bringing new products and technologies for the Indian farming community to support them in their endeavor to increase farm productivity and safety of the food. Looking at the financial results of the year, our revenue from operations during Q1 FY24-25 is rupees 493.58 crores with a significant improvement of 33.74%. I repeat, 33.74% as compared to the corresponding quarter previous year. EBITDA stood at rupees 71.72 crores in Q1 FY24-25, representing an increase of 64.46% as compared to the corresponding quarter of the previous year. Profit after tax is at rupees 48.9 crores in Q4 of FY24-25, representing a growth of 48.45% as compared to the corresponding previous year quarter. Friends, the zone-wise percentage share of turnover was North 31%, East 8%, West 42% and South 19%. Product category-wise share of turnover was insecticides 25%, fungicides 10%, herbicides 50%, others 15%. You will notice that out of 100%, 50% share was only of herbicide, because initially the consumption of herbicide is highest in the first quarter. But due to less rain from 1st July till 25th July, the consumption of herbicide has been less, and there will be some goods return in the month of July because of the known consumption of herbicide. For financial year 24, the company has already rewarded its members by paying an interim dividend at the rate of 400%, that is rupees 8 per equity share, having face value of rupees 2 per share, which has absorbed rupees 36.46 crores. The shareholders of the company in the 39th annual general meeting held today has approved the final dividend at the rate of 300%, that is rupees 6 per equity share. This will absorb an additional of rupees 27.35 crores with a total payout of 27% of our last year's PAT. Further, the Board of Directors of the company in its meeting held today has approved the proposal for buyback of 5 lakh equity shares of the company for an amount not exceeding rupees 100 crores, rupees 100 crores only, at a maximum price not exceeding rupees 2,000 per equity share. Thank you very much for your kind attention. We would now like to open the session for question and answer. Over to moderator. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yash from Stallion Assets. Please go ahead.
Thank you for the opportunity, sir, and congratulations again on a great set of numbers. So given the strong momentum we've seen in Q1, with 34% year-on-year revenue growth, do you believe that this is the right time to revise our guidance from 18% for FY25 to significantly upwards to about 25%? And your margins going up by, EBITDA margins by 20 and 22%?
Yeah, you see, our guidance would be we are upgrading from 18 to 20%. As of now, as you are already aware, the July was not a very good month because of some less liquidation of BD side and some return of the June billing.
Okay. So I thought that, we're seeing a very strong momentum in Q1 because typically Q2 is our largest quarter. It's a very strong. So how are you seeing Q2, going on for right now?
We are expecting a little lower double-digit growth in Q2.
Okay. And so my last question would be, how do you see your margins trending, sir, for the next 2-3 quarters? Do you think we can go above 29% EBITDA?
You see, we are expecting on a yearly basis around 100% decline in the gross margin.
100 bits.
100 bits, basically, and there was improvement in the quarter one, it was expected. But overall, because last year the gross margin was exceptional, so we are expecting a decline of around 100 bits in the gross margin level, and similar dip would be on the EBITDA margins as well.
Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Pujan Shah from Molecule Ventures. Please go ahead.
Hi, sir. Any new plans for introducing 9(3) product in the coming quarters?
Could you repeat your question?
Yeah. Are we planning any 9(3) product to launch in the coming quarters in a herbicide or in the fungicide segment?
Yes. So we are planning one 9(3) product launch in Q3 of this year.
Okay. And as of now, we are seeing herbicide the demand being impacted. How the demand outlook we would be expecting in the herbicide segment, and how it would be evolving in FY26?
In fact, July has been a difficult month for the herbicides. Till June, it was a good run. But after the rains in the last week of July, we are looking at some of the herbicides picking up again. So for some products, the stage is over now, the crop stage is higher. But for some other products, for example, Targa Super will now have a good opportunity after the last week rains of July. So some herbicides are still going to have a good opportunity in the month of August.
Okay, got it, sir. That is from my side.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good afternoon and thank you for the opportunity. So I have a couple of questions. The first question is regarding our engagement going on with innovator partners. So with respect to the approval for manufacturing patented technical molecules, so how has been the engagement going on?
Yes, so engagement is going on. We don't have any breakthrough as yet, but we are working on it.
And what kind of ROC and EBITDA margin can we expect from patented technicals?
You see, it is very difficult to comment at some point of time because there is no such arrangement that has been finalized over now. So that question cannot be answered.
So any ballpark number, what could be it over and above the generic technicals? So at least 50% higher than that or something like that?
No, I can't comment on this part.
Okay, understood. And my other question is regarding how much of our revenue comes from exclusive molecule tie-ups with innovators?
Innovators, our molecules of 9(3) type is around 25% of the total turnover.
Okay. And one basic question. So do the generic formulation are sold under a brand name or is it sold without a brand name?
They are all sold under brand name.
Okay. And do we have any plan to export formulation where registrations are required?
So we have started exports of formulations, not in Dhanuka brand, but in some partner distributors in the destination countries.
So their registrations are required by us, or is it the registration of our partners?
Registration is required by the local distributor.
Okay. Thank you. I'll join back the queue.
Thank you. The next question is from the line of Hussain Bharuchwala from Carnelian Capital. Please go ahead.
Fine. On the technical bit, you said that you are doing some patented technicals. So will you have elaborate on that part?
Could you repeat again?
Sir, you said you are doing some patented technicals. So can you elaborate on that part? What are basically we doing on the patented technicals? Is it on the manufacturing side that we are doing in Dahej? Something of that sort? If you can explain that part.
So we did not mention that we have started manufacturing any patented technical. We are looking at tie-ups with companies who are having patented technicals for manufacturing purpose. At the same time, we are introducing patented technicals as formulated products in India in Dhanuka brand. So no patented technical manufacturing, but yes, patented technical introduction as unique products for the Indian market.
Got it. And sir, since you said there are returns that are happening in the month of July, so how do you see the whole year, financial year? If you can give us some ballpark in terms of the guidance. I think initially you explained to some extent, but if you can give some number in that field, it will be better for us to understand. For the whole year, what is the revenue guidance? Maybe say 18% was initially, now you guide between 18 to 20%. You cover up, and yes.
Yeah, that's right. We are giving the guidance of between 18 to 19% and 20%.
Got it, sir. Got it. And any update in terms of interactions with the Japanese player? Any update in terms of maybe we had a certain site visits by the Japanese. So is there any further discussion that are happening or any of that sort that we are able to commensurate or any discussion with the Japanese? You can help us out to understand that.
Whenever there is any significant update, we will definitely update all the investors. Yeah? Could I answer your question?
The line for the current questioner seems to have disconnected. We may move on to the next question.
Sure.
The next question is from the line of Viraj from Simple. Please go ahead.
Yeah. Hello?
Yes, sir, you may go ahead with your question.
Yeah. So first question is, you mentioned about sales return happening in July. And, if you say for the full year, we're expecting around 20% growth. Now, given the kind of growth we've seen in Q3, it would mean that for the balance, 3 quarters of the year, the growth will be flat, even if I consider 20% growth for the full year. So why this conservatism? Just trying to understand on that. So that is one. And second is, similarly also, the margin guidance which you gave, right? That on a full year basis, we're expecting around 100 basis points contraction in EBITDA margin. Again, that would mean a degrowth in PAT for the rest 3 quarters. So just trying to understand, how does it add up given the environment is very positive and the RM price is also relatively conducive?
You see, when we are talking as a consolidated view, including Dahej. And so far now, our Dahej unit is delivering negative EBITDA. So considering that impact, I am telling you there would be an impact of around 100 basis point. And as far as you are talking about the 20% growth in the top line, if we are delivering around 15% growth quarter on quarter basis, then only we will be able to deliver 20% annual basis.
No, I understand. So for Dahej, what will be the revenue contribution and the profitability or the loss? How much would that be for the quarter?
For the quarter, the contribution, the top line is around 14 crore, and in terms of the EBITDA, there is a negative EBITDA is 3.75 crore.
Right. Still, I mean, if you adjust for Dahej also, the losses we will be incurring, it seems the base profitability, base business, the B2C business would see some good profit growth for this 9 months.
I could not get your question.
The environment is so positive, and the way the RM prices are still, quite favorable for branded formulated players like us.
Right. You see, last year there was an exceptional growth because the raw material price was declining every month-on-month basis, but similar reduction was not happening in the final product price, because of which some extraordinary profit, extraordinary GP was there last year. Therefore, we are saying there could be an impact of around 100 basis point on a whole year basis in the gross margins, including the hedge.
Okay. Okay, got it. And in terms of specialty portfolio, what would that be in the quarter?
Mr. Viraj, please repeat your question as you are not audible.
Yeah, my second question was in terms of the product mix of specialty and non-specialty portfolio. And has there been any price correction in the specialty portfolio also?
You see, major impact was in generic. Specialty portfolio, there was no much impact.
So what is the mix? What is the revenue contribution in specialty?
It was almost 50-50.
Okay. Sure. Thank you.
Thank you. Before we take the next question, all the participants who wish to ask a question may press star and 1. The next question is from the line of Rohan Gupta from Nuvama Wealth. Please go ahead.
Hi sir, good afternoon. Thanks for the opportunity. So my first question is on breakup of volume versus price-led growth in the current quarter.
Current quarter volume versus value, there is a difference of 6%. Our volume growth is more than 39% as against value growth of 33%.
Oh, so you're saying price was negative minus 6%, you're saying?
Yes, but you see, on a overall year basis, we are expecting the impact maximum 2%, because you see, last year the price was declining quarter-on-quarter basis, but the things have improved significantly. I am expecting the difference of value versus volume would remain around 2-2.5% in quarter 2, and it should be 0 sometime in quarter 3, and quarter 4 should be little reverse, and on a yearly basis should not be more than 2%.
Sir, with this 39% kind of, fantastic volume growth, my question is, Rahul, how do you see that the industry for the quarter would have grown? Also, I heard that in July, definitely there was some, in herbicides, some sales returns and slightly weakness coming back. So, just wanted to know that the industry scenario and for the year, what kind of volume growth you are anticipating in the current scenario for the industry?
Well, we are just breathing out of the end of the quarter, so it's difficult to give some industry estimates. However, my best estimate is that probably half of what we have grown would be the volume growth of the industry. And our growth has been driven significantly by our recent new launches, Purge, a very powerful Japanese herbicide for groundnut and soybean, Lanevo, a very strong insecticide for horticulture crops, and horticulture crops, as we have seen, have received a huge impetus across the country because of their pricing, value to the farmer, and also boost by the government. And our launch of Mycore Super, which is a biological product and a soil quality enhancer, that is also offered for specialty crops, horticulture crops, sugarcane, and pulses. So these three offerings have really given us a big boost, and our couple of years back started export and domestic trade business has also given us additional boost. So I think what our team has achieved is a good achievement for the first quarter, and the industry growth would be somewhere about half of that.